Hello, beautiful minds, and welcome back to Boni's Life, the one and only channel where we decode the digital DNA of the crypto markets. I'm your host, Boni, and today is Friday, October 31st, 2025. We are closing out the month with an intellectual safari into the wild, unpredictable, and endlessly fascinating jungle of cryptocurrency trading. This isn't your average surface level overview. We are going deep. We will dissect the current market with the precision of a neurosurgeon, from the monumental shifts in global economic policy down to the frantic heartbeat-like ticks of the 1-minute chart. Whether you're a long-term visionary, a nimble swing trader, or a high-frequency day trader, this episode is your definitive guide. The market has been putting on a masterclass in volatility. The recent pronouncements from the Federal Reserve have sent shockwaves through the system, and the charts are painting a picture worthy of a Picasso: complex, multi-layered, and open to interpretation. So I invite you to pour yourself a large coffee, silence your distractions, and let's begin this journey. We will analyze the past to find clues, understand the present to find our footing, and prepare for the future to seize our opportunities. And we'll do it with a healthy dose of intellectual curiosity and a slight, almost imperceptible sense of humor. Because if you can't smile when the market is testing your resolve, you're in the wrong business. All right, let's begin our diagnosis by ascending to the 30,000-foot view. What is the fundamental state of the crypto market on this pivotal Halloween? The total market capitalization is currently hovering around a massive $3.88 trillion. This is a testament to the sheer scale and global significance of this asset class. While we've seen some pullback, holding this level shows incredible resilience and a strong base of underlying investment. Now, let's get psychological. My go-to tool for this is the Crypto Fear and Greed Index. Yesterday, we were at 34 in fear. Today, that fear has deepened, with the index dropping to 29. This tells us that market anxiety is heightening. For the contrarian investor, this is a signal. A deeply fearful market often precedes a rebound, as retail panic can create prime buying opportunities for those who remain level-headed. The metaphorical streets are looking rather crimson, and that's when the smart money starts to shop. Let's move on to volume and open interest. 24-hour trading volume is at a substantial $346 billion. While this is a slight decrease, it shows that the market remains highly active. Open interest, OI. The total value of all outstanding derivative contracts currently stands at $158.68 billion. We've seen a minor dip of about 1.26% here, which suggests a slight cooling of speculative leverage, but the overall number remains incredibly high, indicating that institutional players are still very much in the game. Finally, we must discuss the brutal reality of liquidations. In the past 24 hours, a staggering $819 million was liquidated across exchanges, impacting over 209,000 traders. A whopping $691 million of that, that's 84%, was from long positions. This is the painful consequence of over-leveraged bullishness in a choppy market. These liquidation cascades drive prices down, but they also reveal where the market might be headed next, as it often moves toward large pools of liquidity. So our initial diagnosis is complete. A market of immense scale, currently experiencing a healthy correction and a surge in fear. Speculative excesses are being cleansed and the stage is being set for the next major move. If technical analysis is the what, fundamental analysis is the why. And the why right now is a masterclass in global economics. The undisputed king on the board this week remains U.S. Federal Reserve Chairman Jerome Powell. On October 29th, the Fed cut rates by 25 basis points, bringing the target range to 3.75% to 4.00%. In theory, this is rocket fuel for risk assets like Bitcoin. But then came the press conference. Chairman Powell poured cold water on the market's enthusiasm, stating a future rate cut in December was not a foregone conclusion. The market, which had priced in more cuts, had to recalibrate. This is a textbook case of buy the rumor, sell the news. The result was a sharp drop in Bitcoin, a stark reminder that we are all for now playing in the Fed's sandbox. But the Fed isn't the only player. The complex relationship between the US and China also casts a long shadow. A new trade agreement was reached on October 30th, which should create a risk-on mood. However, the market's reaction has been muted, with its gaze fixed so intently on the Fed that it's ignoring other significant geopolitical shifts. This creates a potential information arbitrage for traders paying attention to the bigger picture. Now, let's turn to the bright sunshine of fundamental adoption. This is the real story. The institutional FOMO is palpable. We have record-breaking open interest on the CME, steady inflows into Bitcoin ETFs, and public companies like MicroStrategy continuing to add Bitcoin to their balance sheets. These are strategists making a long-term allocation to a new asset class. This maturing of the market is also reflected in the stablecoin ecosystem. Capital is flowing from Tether USDT to the more regulated USD coin USDC, a flight to quality, and the potential is astronomical. Standard Chartered is now forecasting $2 trillion in tokenized real-world assets by 2028. This is the ultimate bull case, the tokenization of everything. So, the fundamental landscape is a battle of titans. In the short term, the old guard can still move the market. But in the long term, betting against innovation is a losing game. Now we transition from the why to the what. Let's analyze the charts from three crucial perspectives: the long-term investor, the mid-term swing trader, and the short-term day trader. The long-term view, the investor's telescope. For our long-term visionaries, we look at the weekly and monthly charts. The trend for Bitcoin is undeniably upward. The recent pullback from the all-time high of $126,000 is, in this context, a minor blip. We are in a healthy, necessary consolidation phase. The most critical area of support on the weekly chart is the zone between $100,000 and $104,000. This zone was a formidable wall of resistance for months. Now it should flip into a massive floor of support. As long as we remain above this fortress, the long-term bull market is secure. Any visit to this area should be viewed as a generational buying opportunity. On the upside, the target is clear: a sustained break above $126,000. This would usher in a new phase of price discovery. Long-term models project a peak for this bull run in the range of $180,000 to $260,000. The strategy for the long-term investor is one of conviction and patience. Accumulate on the dips and hold on for the ride. The mid-term view, the swing trader's map. Now we zoom in to the daily and 4-hour charts. The current map shows us, in a period of consolidation, a sideways channel between the key levels of $107,000 and $123,400. Bitcoin is currently trading around $110,200, right in the lower part of this range. The floor of this channel, the $107,000 level, is the swing trader's line in the sand. We have successfully defended this level multiple times. A convincing bounce from here would be a signal to go long, targeting the top of the range. The RSI on the daily chart is in bearish territory, but the MACD is showing signs of a potential bullish divergence, a classic leading indicator of a potential trend reversal. The ceiling of the channel is the formidable resistance at $123,400. A breakout above this level, especially on high volume, would be a powerful signal that the consolidation is over and the uptrend is resuming. The strategy here is to wait for the retest. A successful retest is the high probability entry for a long position, with an initial target of $130,000. The short-term view, the day trader's microscope. Finally, we place the market under the microscope of the 1-hour and 15-minute charts. As of now, Bitcoin is trapped in a very tight intraday range between $108,200 and $110,500. A day trader is watching this range with intense focus, looking at the order book and monitoring funding rates on perpetual swaps. A break above the intraday resistance at $110,500 could trigger a quick long scalp towards $112,000. A break below the intraday support at $108,200 could trigger a short scalp down to the major support at $107,000. These trades are executed with precision, with tight stop losses and clear profit targets. day traders are also hunters of liquidity. The recent liquidation cascade of $819 million is a prime example of this brutal market mechanism. Understanding these dynamics is what separates the profitable day trader from the losing one. Analysis is fascinating, but it's useless without a concrete plan of action. So now, we translate our analysis into actionable strategies tailored to your specific trading personality. For the long-term investor, the architect of wealth, your strategy is one of patience, conviction, and strategic accumulation. Your primary weapon is dollar cost averaging (DCA). By investing a fixed amount at regular intervals, you remove emotion from the equation. You automatically buy more Bitcoin when the price is low and less when it's high. While DCA is your baseline, enhance it with strategic accumulation. Keep a portion of your capital as dry powder, ready to be deployed during significant downturns. A move into the 100,000 to 104,000 support zone should be a cause for excitement, not alarm. This is the sale you've been waiting for. Your risk management is about position sizing and conviction. Never invest more than you're willing to lose. Your take-profit strategy is not a price target, but a life goal. You sell when your investment has fulfilled its purpose in your financial plan. For the mid-term swing trader, the master of tides, as a swing trader, you are a master of the market's tides. Your strategy is based on identifying the prevailing trend and trading with it, using support and resistance as your entry and exit points. Here is a high probability setup for the coming weeks. The market is consolidating within a well-defined range between $107,000 and $123,400. Your job is to trade the edges of this range. The support play, long. Patiently wait for the price to test the $107,000 support level. Look for a bullish candlestick pattern on the daily chart. Your entry would be on the close of that confirmation candle. Your stop loss should be placed below the low, around $103,500. Your first profit target should be the midpoint of the range, around $115,000. Your final target is the top of the range at $123,400. The breakout play, long. A decisive and high volume close above the $123,400 resistance on the daily chart is a powerful buy signal. Wait for the retest. A successful bounce off this retest is your entry. Your stop loss would be placed below the breakout level, and your targets would be the next levels of resistance, starting with $130,000. Your risk management is paramount. Never risk more than 5% of your trading capital on a single trade. Always have a trading plan before you enter a trade. For the short-term day trader, the apex predator. As a day trader, you are the apex predator of the market ecosystem. You operate in the fast-paced environment of the lower time frames. Your strategy is one of precision, speed, and ruthless risk management. For the next 24-hour trading session, the key is the tight intraday range between $108,200 and $110,500. Your game is to trade the breakout from this micro consolidation. The scalper's long. You are looking for a sustained break above $110,500, confirmed by a surge in volume. This is your trigger. You enter long with a tight stop loss just below the breakout point at $110,200. Your targets are $111,500 and $112,000. You take your profits quickly and move on. The scalper's short. Conversely, a breakdown below the $108,200 support confirmed by volume is your short trigger. You enter short with a stop loss just above the breakdown point at $108,500. Your target is the major support level at $107,000. For the day trader, risk management is not just a part of the strategy. It is the strategy. You must have a positive risk-reward ratio on every trade, and you must have a max loss for the day. If you hit that limit, you walk away. While Bitcoin is the king, the crypto kingdom is vast. This is where the potential for explosive gains lies, but also where the risk is highest. Currently, we are in a phase called Bitcoin dominance. When Bitcoin is volatile, capital tends to flow out of riskier altcoins and into Bitcoin. Ethereum has dipped just below the crucial $3,900 level. However, Ethereum has a powerful ace up its sleeve, the upcoming Fusaka hard fork in early November. This is a significant upgrade to the network's scalability and efficiency. A successful implementation could be a massive bullish catalyst. Other large-cap altcoins are also at critical junctures. XRP is trading around $2.54, and despite a price drop, institutional interest on the CME is at a record high. This divergence suggests that while retail traders are selling, the smart money is accumulating. Solana is trading at $189 and continues to show underlying strength in its developer community and ecosystem growth. The strategy for navigating the altcoin arena is one of cautious optimism and extreme selectivity. Look for projects with strong fundamentals, upcoming catalysts, and relative strength. The optimal time to go heavily into altcoins is typically after Bitcoin has stabilized and started a new, clear uptrend. For now, the prudent strategy is to build a watch list of high-potential altcoins. Accumulate small positions in your highest conviction plays during this dip, but keep the bulk of your altcoin capital on the sidelines, waiting for the clear signal that alt season has begun. And so, our deep dive into the intricate world of the crypto market comes to a close. We have traversed the landscape from the highest peaks of macroeconomic policy to the deepest valleys of intraday price action. The picture that emerges is one of a market at a crucial inflection point. The short term is fraught with fear and uncertainty, but the long-term narrative of technological revolution and financial disruption remains as powerful as ever. We have armed you with a comprehensive analysis and, more importantly, with actionable battle plans for every type of trader. Whether you are an architect of long-term wealth, a master of the market's tides, or a predator in the fast-paced world of day trading, you now have a roadmap. But remember, a map is useless if you don't have the discipline to follow it. Trading is a journey of continuous learning and self-mastery. The market is the ultimate teacher, and it is a harsh one. It will test your patience, your conviction, and your emotional resilience. The key to survival and success is to approach it with humility, to manage your risk with unwavering discipline, and to never ever stop learning. Thank you for dedicating your valuable time to Boni's life. If this analysis has provided you with clarity and value, I would be immensely grateful if you would support the channel by hitting that like button, subscribing, and ringing that notification bell. And now I want to turn it over to you, the brilliant minds of this community. What are your thoughts on the current market? What setups are you watching? Share your wisdom in the comments below. Let's foster a community of intelligent, collaborative, and profitable traders. Until we meet again, trade with intelligence, trade with discipline, and may the pips be ever in your favor.